You are on the Transparent FX Academy. I'm Nick, and I'm a top potter on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns that show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. The pair that I want to speak about in today's video is EURUSD. Now, why do I want to speak about it? First of all, because it is the most traded pair in the market, and also because we are quite near for the creation of a nice trading opportunity on it. So I want to give you guys a full breakdown of the situation that we have, since the market has also now created new structure from our previous analysis on EURUSD, so it's definitely time for an update. And as usual, I will be keeping this analysis as educational as possible. So first, I will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds, so the biggest speculators in the market, are doing. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probability set up here on this pair. Now, starting from the monthly time frame, what we can see. Now here on the monthly, we can see how the market has just provided a nice impulse to the downside, followed by this correction. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we do that, what we can see is that the market has just tested exactly the 0.618 of the Fibonacci taken on this monthly impulse and started this rejection to the downside. Now, in a situation like this, what you usually expect is for the market to provide a deeper rejection before a potential continuation to the upside, since overall, the bullish momentum that the market has here on the monthly is quite clear, and we can also notice how the market has actually broke above the previous structure. Which structure am I speaking about? This previous resistance, which was supposed to be turned again resistance here, however, the market has already broken above it, so this means that this previous resistance is now turned support. So even though the market just tested the 0.618 here, we can expect maybe a little bit of a rejection, a little bit deeper rejection before the continuation to the upside. But anyway, it will be a lot clearer if we go down on the lower time frames. In fact, if we go down on the weekly, what we can notice is that the price action becomes quite clear. We have a market which has a nice W formation. And after the creation of a W formation, what you expect is for the market to complete the pattern at the neckline, which is the previous resistance turn support, before the continuation to the upside. And in fact, we can see that that is exactly what the market is currently doing. First, the market went down and completed the pattern at the neckline, which is the previous resistance turn support, and currently we can see how the market is starting to reject the zone to the upside, possibly providing a higher high. So here on the weekly time frame, everything is quite clear, and we do expect the market to provide a continuation to the upside. Just a quick thing, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Going down on the daily time frame, what do we have? Now here on the daily, I spoke about EURUSD quite a few times in the past. I spoke about EURUSD after the creation of this M pattern. I made a full breakdown explaining all the reasons for which we wanted to see the market create this correction back to the neckline. And in fact, that is exactly what the market did. And once again, I spoke about EURUSD when the market was at this level, explaining all the reasons for which we wanted to see the market provide a move to the downside, printing a lower low and completing the weekly W formation. And we can see that that is in fact exactly what the market did. And by the way, I will link both these previous analysis in the description, so you can go and check them out for further reference and more free education. Now at the moment here on the daily time frame, we can see how the market has just broken back above the structure, or at least it is trying to break above the structure. In fact, this zone was previous support, which after the market broke it to the downside was supposed to be turned resistance here. However, we can see how the market is managing to break above this previous support, which is supposed to be turned resistance here. And if the market will successfully break and close above this structure after the break, on the retest here, we can be looking for a potential longing opportunity. And we can see that we still have in 11 hours and 29 minutes before this daily candle will actually close. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds, so the non-commercials and the biggest speculators in the market are doing, what we can see is that with the last reports, net positions have been increasing. In fact, we went from having 66.8k net positions all the way up to having 80.9k net positions, with the longs increasing from 190k to 200k from an institutional perspective, and shorts getting decreased from 124k to 119k. So overall, EURUSD is getting quite bullish from an institutional perspective, with shorts decreasing and longs increasing. This means that the continuation to the upside is possible, specifically if here we will have a confirmed break above the structure. So the way in which we will be approaching this with students is as usual being reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So if we will have a successful break and close above this structure after a break on the retest of this previous support, which will be against support here, inside of this area, what we will be doing is monitoring price action from an intraday perspective, so 4-hour and lower, waiting for the market to shift from a 4-hour and lower bearish market as we will have to a 4-hour and lower bullish market. And if the market will shift from an intraday bearish to an intraday bullish market at that point, with students, we will be adding EURUSD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to provide a higher high, rejecting this previous support that is once again support at this level. If you enjoyed the video, make sure you smash that like button and comment below. Also, you can go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. In fact, every day you get a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also get a daily Q&A session in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out. And I will see you in my next breakdown.